Before the video begins, I would like to say that the information provided pertains to me personally and is not financial advice but may provide information that you could find edifying. In this video I will be discussing my 3-fund Fidelity portfolio. In a previous video I talked about my Vanguard 3-fund portfolio. Feel free to take a gander. The short of it is, at beginning of 2020, which is also the start of COVID, I had $40,000 available to invest. I decided to divide this sum equally and put $20,000 into the Fidelity Investments platform and the remaining $20,000 into Vanguard. The reason for the investments is to use after-tax contributions to establish a college fund for my child and to supplement my Social Security benefits, that's if it still exists, as well as my employer-linked retirement. After-tax contributions are funds you have accumulated either from your paycheck after all of your deductions have been taken out, like FICA, medical and the like. This also includes extra funds from side hustles, gifts, etc. The investment is meant to be low maintenance, meaning there will be little to no changes in the portfolio while holding for the long term, a set it and forget strategy where there are only 3 investment funds or baskets that contain hundreds to literally thousands of companies. All that is necessary is to contribute regularly and allow the magic of compound interest, dividend reinvestment, time and the increased share value for a stable and robust nest egg, or at least that's the plan. Note that the account was set up and funded 100% online. Over a 2.5-year timeline and up to August 2022, primarily 2020 and 2021, a number of different funds were invested in, numbering as much as 6 funds, my attempt at as much diversification as possible. With monies allocated between a non-retirement account and retirement, specifically a Roth IRA for the retirement allocation. Over the first half of 2022, these funds have been whittled to 3 funds. Reasons being, since these investments will be a supplement to my employer-linked account, I deduced that it might be a little extreme as regards to diversification and was not necessary. Secondly, the current 3-fund portfolio also met my diversification requirements. Thirdly, having fewer funds to contribute to would allow for a more focused instead of scattered approach. For example, $300 divided over 6 funds would be $50, while 3 funds would allow $100 each instead. The goal is in the Vanguard account is a 10 to 15-year time horizon, at which time plans as regards to higher education for my offspring, as well as retirement, would be that much closer, and more precise decisions can be made. The funds breakdown is as follows: FSKAX, FXIAX and BITW. FSKAX and FXIAX are mutual funds, while BITW is an ETF. Mutual funds let you pool your money with other investors to mutually buy stock, bonds and other investments. You get exposure to all the investments in the fund and any income they generate. Just as in the Vanguard discussion, FSKAX is Fidelity's total stock market index fund. Total stock market means the fund includes all publicly traded companies in the domestic market of the U.S. These companies include well-known names such as Home Depot, Google, GM, Ford, Procter & Gamble, just to name a few. FXIAX is the Fidelity 500 index fund. This means the fund is designed to track the S&P 500. The fund is a stock index of the 500 largest publicly traded companies in the domestic market of the United States. The 500 companies are a subset of the total stock market index fund, which has north of 3,000 companies in its fund. BITW is a fund which seeks to track an index comprised of 10 cryptocurrencies. These currencies are Bitcoin, Ethereum, Cardano, Solana, Polkadot, Polygon, Avalanche, Litecoin, Cosmos and Chainlink. I have chosen FSKAX for my Roth IRA or individual retirement account, designed to help save for retirement with after-tax contributions for tax-free income in retirement. This can be a great supplement to your employer-linked retirement account, or if your employer does not provide a retirement plan, the IRA is a great option to start your own self-directed retirement strategy. As regards to a Roth IRA, for 2022 you cannot contribute more than $6,000 if you are under age 50 and no more than $7,000 if you are older than 50 years old. BITW, on the other hand, is an ETF or exchange-traded fund, a type of investment fund that is traded on stock exchanges. ETFs are similar to mutual funds except that ETFs are bought and sold from other owners throughout the day, while mutual funds are bought and sold from the issuer based on their price at the end of the day. Unlike Vanguard, there is no minimum investment to purchase FSKAX and FXIAX, and fractional shares are available with these accounts. At the end of 2020 and up to late 2021, the total portfolio was north of $22,000. Since then, with the war in Ukraine, a dip in cryptocurrencies, and the Fed increasing interest rates, these totals have dipped as much as 15% or so. This is not a concern at this point since I do not intend on withdrawing funds for a number of years. The decrease in the cost of the stock price also gives me the ability to buy more with less money. So as of October 31, 2022, BITW's value is $870, FXIAX's value is $10,569, and FSKAX has a value of $7,562. A total portfolio of $18,965. Thanks for watching. This brings us to the end of our video. If you found this informative, beneficial, or interesting, please like or share. It will help in promoting the channel. Until next time.